Hi, I'm Devin and welcome again to the Money Minute. Wow, the last few days in the markets have been crazy. And specifically, we've seen some eye-watering volatility from precious metals. Let me take you through what's happening. Now, as we've discussed previously, precious metals like gold, silver, platinum, and many others have been on an incredible run recently, and they've reached record prices last week. But currently, they're trading sharply lower. So what actually happened? Well, there have been a number of factors that have driven their share prices sharply higher, and these we've discussed before. Looking at gold as an example, it started the beginning of last year at $2,500 an ounce, ended the year at $4,300, but then last Thursday hit $5,500 an ounce. However, today it's trading much lower, under $5,000, and we've seen very similar movements in the other precious metals as well. Now, while some of these movements are driven by underlying fundamentals, there is an element of emotional investor behavior that's crept into these prices too. Now, these movements are enough to give investors whiplash, but the real question is, what should they be doing now? And the answer lies in a familiar place, and that is to build investment portfolios that are structured to capture some of the upside of these rallies, but also protect investors from the downside. Financial markets are always going to have some shiny new investment opportunity, excuse the pun, but we need to look at the risk associated with them as well as the potential returns. And listeners to the Money Minute will know that managing the exposure in a well-diversified portfolio insulates their investments from these pullbacks. The key is to ensure that investors don't avoid risk, but manage it effectively. Thanks as always for watching. Have a great week.